Yo, what's up, Sean? Yeah, let's fucking go, man. So we're back to $5. Our goal is to get back into this channel right here, break the top of it, and then let me zoom out here. The daily. I don't know what these random dots are, but our goal is to break this channel right here to be able to go to the next one. So the top of the next one's around $70. This probably isn't the best chart. I have another AMC chart I can show you guys, but GameStop. So again, we had this, Wyckoff schematic. Your shooter TTV, let's fucking go. $8 by Friday. Hey, it's possible. If we break above this channel, I definitely see like $8 coming. GME, I want to see $53. That's our next target here. So, yeah, we did have this, Wyckoff schematic. We came down in a trend short distribution. We had our little spring, retested the distribution, shot right up. So I'm thinking this may be a 5-wave move. 1, 2, 3, 4, and then 5. Fifth wave being at $53. But our final target for this third wave is around $100. If we zoom out to the daily. I don't know if you guys have already seen this chart already. I think y'all have. Let me show y'all. See, sacred line chart. Yeah. This was another one that I made recently with fib lines. I was trying to find some kind of time-based. Let's see. This could take us to. Yeah. Let's see. Yeah, we're kind of bouncing off of this channel right here. So we were in this fib channel. Let's see here. If we break the top of this channel and then use this one as resistance, it would be around about $800. So our next resistance is around $120, which is literally the peak of this channel, coincidentally. I mean, if you think about it, if we break the all-time highs, I mean, we're probably just gonna explode to the upside. So I still have that $800 target. Let's see. Yeah, I think what we're gonna do is we're gonna be able to ride this fib channel up, and I want to be able to ride this fib channel through. Let me see, through this white channel, this purple channel, and then be able to hit this point. Let me just zoom out so y'all can kind of see. Let me take off this fib channel here, so you all can kind of see more clearly of what I'm thinking about. We have these two ascending channels that price has kind of been bouncing around in. So our target is the top of these two channels, this white channel and this purple channel, at around $820. So, damn, AMC's gonna reject it a little bit. Yeah, we're getting rejected off this lower trend line. We should be able to make it by end of day to the top of the trend line. So if you take your measurement of this, let's say this is a like flagpole, this is kind of like a pennant pattern-ish type thing. You just put out the breakout level, and we're actually sitting at around 611. So depending on how long it takes us to get there today, we should be able to get. We should be able to get at least to the top of this channel right here. It's kind of unfortunate. I don't know why we're dipping here, but $5 has been giving us a lot of trouble. Let's check on the open interest again at the $20 strike. 145,000. Holy Christ. Oh my god, that is insane. So wow, that is just incredible. And so by the 21st, why is that so insane? Well, send it. No, it's. I mean, I'm thinking that it's gonna fucking send, because you have 145,000 contracts that are in the money. They're currently in the money. So what does that mean? Well, Roaring Kitty has like a majority of them. If he exercises those calls, whoever wrote them, and it was probably a market maker or some shit. They probably wrote them partially naked, meaning that they wrote the calls without the underlying shares. So if I exercise a call option, whoever wrote me the call option, it's called assigning them. So I'm assigning them that call option. They have to go into the market and buy 100 shares to give me my 100 shares that I'm owed. There's 145 fucking contracts. Like you do the math there. Like 145,000 times 100. They have to find all of those shares. And so what happens is there's a bunch of like buying pressure in the market, to get all those shares, and then the next strike price is in the money, and then those get exercised, and then the next strike price is in the money, and they get exercised, and it's just like, it's called a gamma squeeze. Essentially, it's like this just chain reaction of like these calls being in the money, and then all these people have to buy shares to give these call buyers. So this shit couldn't fucking explode, man. Like, because I've never seen, like, I mean, you really think about it. He put like millions and millions of dollars to be able to buy these call options. So, I mean, we're gonna see some crazy shit coming. I believe. I totally believe that they don't have them. Yeah. So that's a gamma squeeze. Like, we're not even counting all the naked shorting, all this other bullshit that they're doing. Like, just the fact that he has that many call options, he could start a gamma squeeze like by himself if he starts exercising. Breaking news, according to the most recent GME 13F filings, all of the top call option sellers combined do not have enough shares to satisfy Roaring Kitty's 12 million shares currently in the money. Let's see. Yeah, whoever wrote him the calls, they fucked up. They fucked up, bro. They were probably thinking like, honestly, whoever wrote them the calls were kind of like really dumb, because I don't know how they didn't notice. Like they thought they were just making free money or some shit. They were just writing these calls like they thought that shit was free money. Do I see anything happening today leading up into Friday? Leading up into Friday, on GME, I wanna hit this $53 mark. Let's see. That would give us 3 days. Yeah, I wanna see us break this top here at 40. And if we break this top at 40, I think we're gonna hit 53 ending on Friday. It really just depends. AMC, I just want to see us get above this $5 to $6 mark at the top of this channel. Like, that's all I want to see at the end of this week. It's like, it's very hard to do like time-based like analysis on these things. It's kind of just, you never really know when things are gonna happen. You know, for example, like Roaring Kitty, you know, tweets, and then you have this crazy run up out of nowhere. It's like, you know, was that coincidence, or was that, you know, part of the technical analysis? I don't fucking know, because it kind of was. I mean, it went all the way and retested the top of this channel. So yeah, AMC. This is the goal for AMC. I don't know how long it's gonna take, but we need to get above. Let me go to my Elliott wave chart. Our target is to get above this $6 to $7 range. If we go to the daily, so this is a 2-year-long channel that AMC has been in. So our goal is to get back into this channel and then break the top of the channel at $21, $20. Do you have any plans on selling on the way up? Yeah, so, I have some shares, I have some options. So, I mean, obviously, I'm gonna be selling most of my options. Like, AMC, my initial target is 130, and because I'm targeting this. Obviously, none of this is financial advice. Okay, but no. So AMC's gonna see resistance at around 20 at the top of this channel, around 20 something dollars. You know, $20, $22, depending on how long we get there. So AMC is gonna see resistance there. If we break above this level, if we use it as support, I think that we're going to go to this horizontal point of interest, where it's the bottom of it is actually the top of this last run up in 2021. And as you can see, we tested multiple times at the beginning of price. So I think that we will see this $130 mark, this horizontal level. I'm gonna be real with you. At that point, I'm happy. I don't need more than that. You know, I might not sell everything, but let's see. Okay, GME has really crazy targets. Like, I just don't even know. Let's see. I think we will initially go to $200, $296, have some sort of ABC correction, then have a continuation. So you could take profits at like 200. I mean, it's just so hard to say, you know, because no one, I mean, do you think about the first run up? I mean, no one can really predict that shit. I mean, no one can really predict where it's gonna top out. You just gotta have your own numbers, you know, in your own mind, and be like, hey, I'm gonna sell at this point. I'm gonna leave this much remaining, you know, to be able to run up. I mean, I'm gonna leave just a little bit. I'm never gonna sell everything. I'm gonna have a few shares at AMC and a few shares at GME that I'm just gonna keep pretty much forever, you know, just for fun. But so we had 1, 2, third wave hit the 2.618 extension. Could you say what price points you think these corrections will pull us back to? Okay. I mean, I went over it in a previous video. Let's go over it really quickly. So I think GME is in this ABC right here, as you can see, zigzag pattern. So you have your A, B, and then C waves. And then I think within this B wave, so you have your A wave and then you have your corrective B wave right here. I think we have a corrective zigzag. As you can see here, zigzag correction. You have a 5-wave move down, ABC correction to the upside, an additional 5-wave move. So we have on our A wave 1, 2, 3, 4, 5, zigzag correction, 1, 2, 3, 4, 5-wave move down, ABC correction to the upside, then an additional 1, 2, 3, 4, 5-wave move down. So where would this corrective points be? Okay, well, assuming if this is a 5-wave move, we'd hit 1, 2, 3. So 3 is hitting the 1.618 extension of the first wave. 4 and then 5 at around $200. Then you'd have your corrective wave would hit either the 0.82 retrace at $123, or we could do, I don't think it's gonna go that low to the 0.618. I think it'll just, if we hit $200, I think it'll just correct to either the 0.382 or the 0.5 retrace at $122 or $100, and then we'd have, you know, our additional 5-wave move to the upside, where you get some crazy numbers. Obviously, you have to take all that with a grain of salt, because that's just like an extremely bullish thesis. Like, I mean, anything above $200 is like really, really bullish. But you know, it kind of does line up with multiple charts that I'm making. If you go back to the, I mean, I can show you guys this one too. So this one might have a little bit more appropriate targets. So this is called a bullish Scartley harmonic. Oh, background's too loud. My bad. I just kind of had it on. I was chilling. So, within the next week, I don't know. That's hard to say. I don't want to put any time frames on when we're going to be hitting these price targets. It's just impossible to say. But I mean, I would think so by the 21st of June, since you are seeing such an incredible amount of open interest. Um, you have 145,000 contracts open. I think you would see a gamma squeeze of some sort occurring by then that will give us that initial run up. But again, it's just hard to say. I think that Roaring Kitty kind of caught them off guard, but you never know. So we're looking at, I guess you could call it a little bit more reasonable price targets from this pattern. So this is called a bullish Gartley. So it's a harmonic. It's called a harmonic. So it's based off certain fib levels, right? So you have your XA, then you have your XA to C retrace, and it has to be 0.382. We hit 0.382. You have your BC and your CD, and then BD is 1.272, which we hit 1.3 ish, which is close enough. These things don't have to be an exact science, but you can obviously see the structure of it. So targets for a bearish Gartley would be right here, as you can see, the 1.618, the 2.618, the 4.236 extension of your XA, and that would put us at $150, 244, or around $400. So these price targets are a little bit more reasonable, I guess you could say. So I mean, yeah, I might profit take at these certain levels here. I mean, you gotta think like $800. Okay, that's insanity. I mean, it's definitely possible, and you've seen it. I mean, you gotta think about Volkswagen. You gotta think about these other, short squeezes once you saw these crazy price levels. So it's not entirely out of the picture. It's not entirely crazy to think that, but let's see. So you can kind of see that we've been able to ride these fib channels to the upside. We got rejected at this purple channel. Let's see, 64. Okay. So what's a realistic expectation? Because saying we will hit $400 seems absurd. Yeah, I mean, it does seem absurd, but the thing is that I was thinking to myself the same thing. I was like, there's no way we're gonna hit $400, $800. And we may not, and it may not be possible to hit those levels. But at the same time, it's like, if you do have technical analysis that backs it, I mean, you don't immediately have to throw it out of the window. I think that hitting certain levels will kind of give us, like, if we break $200 and then we kind of have like reaccumulation in that area, like we have strong structure, like we build a base. For example, if we shoot up, okay, and like build some kind of base here, then we have to just take that data in and kind of just reevaluate our situation and be like, hey, is it possible we could just break to the upside and hit our $800 target? or is it just possible that we just shoot all the way back down and we die? Like, you gotta take it, as things happen and as more data comes in. But yeah, I mean, I'm showing y'all like 3 different charts that say, it is possible. It is possible. Obviously, it shouldn't be your like expectation. I guess that like, hey, we're going $800, we're going to $1,000, we're going to the fucking moon. Obviously, I'm gonna be profit taking. There's no way in hell I'm holding all the way to $800. Like, you know what I mean? Like, I'm not gonna be holding everything all the way to $800, but we do have more conservative price targets with this chart at $150 to $244. So I mean, at the end of the day, it's up to you. I'm just having fun. I'm just making these charts for fun, and just trying to see if there's any correlation. Let's see. I mean, if this gamma ramp does happen, then we'll have a lot more data to kind of hold on to, and like we can really see better price targets. As of now, we're kind of just shooting in the dark. We're kind of just walking around. Like, I mean, we really don't know where this thing can go. I mean, you gotta think though, this shit looks bullish. Shit looks bullish. It literally just looks like a bear flag. I mean, look, it's literally, I mean, it's just a bull flag. It's literally just a big ass bull flag. Like, look at it. I mean, it's really simple, but I mean, you never know. Let's see, AMC testing $5 again. Yeah, we really need to get back into this channel around 508. So it's kind of our goal. That's our goal right now for AMC. For GME, our goal is around $53. Let's see. All right. BORQ? Yeah, no problem, man. I mean, if you guys have any questions, just make sure to ask in the chat, and I'll go over anything you guys want. And I'm gonna take a small break here for a second. I guess I'll leave it on AMC. I've been leaving it on GME a lot. Leave it on AMC right now. Let me just check something real quick. Yeah, Citadel's trying to make their own stock exchange to compete with the New York Stock Exchange. Hell no. Hell no. Alright, I'm gonna take a small break. I was thinking of selling maybe 50% if we were to hit 60. Yeah, I mean, that $53 is the final target for this kind of 5-way move to the upside here. But I'm thinking this is the beginning of a much larger 5-wave move. 1, 2, 3, 4, 5, ending at around $200. 60 would put us. I mean, this first wave already hit 60, so you'd just be selling like a double top. Essentially, it would come up. It would just like a double top pattern, which, I mean, it could happen, I guess. If we take the 1.618 extension of this third wave, that puts us at 53 bucks. So yeah, that's my next target's $53. We might see some resistance there. Alright, I'm gonna take a small break. Y'all can ask me questions, come back and answer them. Just had to grab another cup of coffee. Had a late start this morning. Oh man. Yep, where are the shares, market makers? Where are the shares? They don't fucking have them. That's, yeah. You got to think. Why did E-Trade? Why did E-Trade publicly come out and be like, "Hey, we're thinking about kicking Keith Gill, Roaring Kitty off of our platform," because they fucked up. They wrote this man 135,000 fucking contracts. Like, they don't have that. They don't have that many shares. They fucked up. Holy crap. Roaring Kitty is smart to hold this options position, so the market makers delta hedge and buy on the lit market. Exercising at this point is stupid. The options are in the money and going to most likely expire in the money anyways. Yeah, so I mean, if these contracts expire in the money, they'll try to execute them all. So you got to think, if he executes all these call options, I mean, that's just millions upon millions of shares. I mean, it'll move the price up for sure. AMC making a little progress, above $5. Yeah, when is the Nvidia reverse split happening? June 6th. Wait, common stock has a market close on Thursday, June 6th. Holy shit. So that's literally tomorrow. What the hell? So Monday is gonna be crazy. Is it really June 6th? Yeah, Nvidia stock split happens on June 7th. Holy shit. That's incredible. Let's look at Nvidia for a second. Jesus, man, this is just... Look at this chart. I just want you guys to look at this fucking chart, man. Like, what is this? This is bullshit. Guys, this is bullshit. I don't know how else to say it. What the hell is this chart, bro? I guess you could come down. We could be at a peaking point here. Actually, I want to try to chart Nvidia. Yeah, I'm gonna try charting Nvidia sometime. Oh hell no, they ain't fucking happening. But yeah, so a 10-to-1, so a 10-to-1 reverse split will put them at around $100. like 100 and something bucks. So yeah, what's gonna happen with Nvidia is, so if they do that reverse split, it'll go down to $100 ish. But what will happen is options will become like exponentially more cheaper, because it's the options will be 10 times cheaper, so everybody can like afford them. Like right now, I mean, you're seeing options with like $10,000 for one contract, like $20,000 for one contract. Even like if they're extremely in the money, you're paying like $100,000 for a single contract. So if they do a reverse stock split and it goes that down to like $100 something, options will be just like more affordable. So you'll see a bunch of options chain activity. So I expect with Nvidia, hey, don't quote me on this, but I expect some kind of run up on Monday, and I think it's gonna crash. I think it will crash following this this reverse split. I think you're gonna see like a blow off the top on Monday, and then like it just won't be sustainable. AMC shareholder meeting. That's today, I guess, at 2 p.m. I know that was happening. Breaking: CNBC's power lunch just put GameStop on a gamma squeeze watch. Yeah, I mean, a gamma squeeze is definitely possible. That would be insanity. As of right now, all of his call options are in the money. So I mean, you're seeing 145,000 call options in the money. 145,000. It's just insane. Let's look at AMC. See if we have any crazy open interest. This is the 21st. Hey, for these $20 strikes, we have around 93,000. That's pretty insane. 93,000 ain't a joke either. I mean, so if AMC goes above $20, you're gonna see a game squeeze on that shit too. Like that. That was okay. That's just insane. And when is that? By the 21st? So they're betting that AMC is gonna be above $20 by the 21st. I mean, damn, it's pretty crazy. January contracts. Let's see. Damn, so this one is January of 2026, 89,000 contracts, the $20 strike. 43,000 at the $27 strike on June 20th. 71,000 at 27 on January 2025. So I mean, you're seeing a lot of open interest on AMC too. So it's not a joke either. I mean, but the thing is that on GME, I mean, one guy owns like 99% of these. Like, and he's not fucking selling. So that should be fucking scary for whoever wrote those calls.
high, lower high.
But those become train stops. And
What? Trading stops.
Train
Okay.
stops. If you think about a train, they end up back.
Train stops.
They end up back at their destination, right? Which can happen with things that are squeezed without any fundamental valuation behind it. So what I see is a risk of a gamma squeeze happening with this.
Ooh, that sounds bad.
It does. With speculative excess, almost like bubble mentality. So a lot of activity really spurring buys that create artificial demand because we're looking at supply versus demand. What I need to see here, it's really the train stops are 21, 28, 40, and 48.
All right.
And then once that demand comes in, I need to watch to see if those are maintained. But again, fundamental reasoning, careful to watch.
Whale alert. This is an old screenshot from January 2021. I'm down 80% from this number. Jesus. Wait, so he bought GameStop Core at $175? What? Wait, that doesn't make sense, does it? Jesus Christ. NVIDIA versus Enron. I mean, you kind of got to think it is a little suspicious. It is a little suspicious how NVIDIA's running up like that. I don't know, man. It is a little suspicious. I'm not gonna lie. NVIDIA is kind of sus, bro. What the fuck is this? What the fuck am I looking at? Yo, what am I looking at, bro? What the fuck? Okay. I'm nervous to do some call options. Yeah, I mean, I would be nervous too because, I mean, you probably already know this, but the options have, they're called Greeks. You have Delta, Gamma, Theta, Vega, and Rho. So what's happening with the GME call options is that they have an insane amount of implied volatility. So like implied volatility is basically saying like how much obviously volatility you're going to see in the stock. You know, like we're going to see big, I mean, just like literally in the pre-market we saw like 100% move. Like that's really high, implied volatility. So you're paying like a lot of money for these call options, like way more than usual. So they're expensive. So I mean, like let's see if we can just look at the cost of GameStop call options. Let's see. So let's go to what strike is this? I guess we'll just go to June 21st. Actually, I mean, let's do a little bit more farther out. So we'll go to January 2025. So GME, let's say you just buy a strike of like $125. So let me scroll up and see this. Bid ask. Yeah, so the implied volatility is over 100%. So I mean, you're already paying like a lot of money. Wait, let's go. Yeah, like what the 839% implied volatility. Holy shit. Yeah, I mean, at these $20 strikes, you already have 226 IV. These have 300, 400% IV. So you're paying a shitload of money for these. So basically, you're paying like a big premium already, and then you're betting that you're pretty much betting on a short squeeze. I mean, pretty much, because if it doesn't short squeeze, I mean, you're just slowly gonna bleed money. Yeah, you're gonna lose a shitload of money. Yeah, yeah, pretty much. I mean, that's, yeah, options. High stakes. Obviously, you can make a shit ton of money as well. Because, so you have your delta and gamma, and then as your option becomes closer to in the money, so let's say your strike price is at $20. Once price goes above $20, so once price goes above your strike price, your option pretty much starts acting as if they were 100 shares. So once your option goes in the money, you pretty much have 100 shares of the underlying stock, and then you're making additional money off of implied volatility, which will be like at insane levels in a short squeeze. So obviously with call options you could make like a shitload of money. At the same time you could lose it all. So that's up to you. That's up for your risk management. That's up for your risk profile that you're comfortable with. Right now you're going to be paying a lot of money for these call options anyways, because IV is already so high. There's already such like a lot of open interest and a lot of people interested, so like you're already going to be paying a premium on these call options. So do that at your own risk. But I'm gonna be real with you. I had call options in 2021, and I'm not gonna say it treated me badly. I'm gonna say it was pretty nice. It was pretty nice, and so I'll say. But obviously, any money that I put into meme stocks, I'm pretty much, in my mind, if I put $5 into a meme stock, I'm pretty much just I'm saying goodbye to that money. Any money I put into a meme stock is like I'm throwing it into the fire. I just forget about it as if it never existed. That's just kind of my thinking on this. Not risking it only because I don't have the money. Yeah, I mean GME call options are already like insane. Let me check the price of it real quick. I can just check a couple of them on my phone. GME trade options. Let's see January 2025s. Yeah, so $125 call strike price. So the price would have to get to $125 by essentially January of next year. You'd be paying $470. So $500. That's a $500 bet. Just for price to go all the way to $125. If we come back into June, let's go to June 21. Yeah, so let's say price is at $30. So let's say you buy a $50 call. So by June 21st, if you bet the price will go to $50, you're paying $350 per contract. That's a lot of money. So I mean, I don't know. I'm not a financial advisor. My strategy is put money in here into meme stocks and forget about it. Any money I put to a meme stock is gone, essentially. But you know, my kind of thinking on this stuff is that, you know, obviously we're all scared to put our money in here. I mean, it's, you know, this thing could go to zero tomorrow, but you gotta kind of think. You know, I was in GameStop and AMC back in 2021, and I was seeing so much FUD. I was seeing so much, you know, fear. People calling me idiot. You know, people calling me you know, retard. Why are you putting your money in these meme stocks? You're gonna go to zero. And at the time, I mean, we had no idea, because this was pre run up, right? This was like before the squeeze happened, and so we were all just kind of buying and holding, and you know, we had our thesis, we had our theories, but we had really no idea. And when the run up happened, you know, kind of all of our theories, kind of all of our ideas got validated. So you kind of got to think, so we're back again doing the same thing in 2024. And it's like, yeah, we're scared again. But honestly, it's like, should we even be scared? I mean, our theory, like, we already got proven right, you know, in 2021. Like, we already got proven that we're right. Like, we're coming back for a second time. And it's like, we already know that this could happen. Like, we already, like, because it did happen already. So, I don't know. I'm a little bit less scared this time around. Thinking about maybe doing a few calls on AMC. What do you think? Yeah, so AMC's around $5. So yeah, options are gonna be considerably cheaper on AMC. Again, I'm not a financial advisor, but it really just depends on like your risk profile. I think it's hard to time, you know, when these things will happen, because you know, back in 2021, people were buying these call options, right? So they were buying call options like 3 months out, let's say 3 months out, or 2 months out, or even a couple weeks out. And I remember waiting like months. Like, I remember like being in a Discord and like people were like, it's gonna happen tomorrow, it's gonna happen tomorrow. And then like it took like 3-4 months for the initial run up to even happen. So I personally would buy like farther out call options, you know, possibly into January of next year. So you're looking at, so you do have, so you have January of 2025, June of 2025. So maybe, and this one's December of 2024. I would just buy farther out call options, potentially, because you're also fighting theta. So every day your option's gonna decay in value as it gets closer to it's closer to its expiration. I don't think we're gonna be volatile this time, but we are gonna make money because of the suit and ties are prepared. Not going to be as volatile. Honestly, they're probably less prepared this time, this time around. Because honestly, I mean, no one really saw this shit coming. I mean, we were kind of dormant for 3 years. Roaring Kitty comes back, posts on Twitter. Then he proceeds to buy 135,000 contracts. Posts his position. You know, I have been seeing a lot of that, like, you know, hedgies, you know, they're prepared this time around. They're not gonna let it happen. But I think we're kind of underestimating how dumb these people are and how crooked they are. I mean, you gotta kind of think that, like, how'd they get themselves in this position to begin with? I mean, you had that Huang guy literally commit like billions of dollars of fraud, like just made up bullshit, selling and buying fraud with his hedge fund Archegos. Like, these people are dumb. Like these people are really, really dumb. So I mean, you never know. And it's like, obviously, I mean, look at this run up. I mean, you're saying that that they're prepared. I mean, we went from $2 to $13. So, I mean, I don't know if they are prepared. I don't know if they're prepared. I don't know. 300%. And the thing is that I mean, if you want to do more research into this, I mean, I don't know enough about it. You know, I'm still learning about it, but they're called basket swaps. So essentially, they want to have more short exposure to these assets, but they don't want it on the books, and so they work with other hedge funds to create a basket of, they're called custom basket swaps. So they put, you know, GME, AMC, in a list of these other stocks into this little basket, and they sell them all. So they have more short exposure to a variety of these stocks, and they're doing this like in the billions of dollars. I mean, so like, not only do they have naked shorts, but they have these basket swaps in which they're short on all these different stocks, like in the billions of dollars, like just billions. That's why I'm thinking, you know, AMC and GME are so connected. You know, why they mimic each other? It's because they fucked up. I mean, AMC and GME are in the same basket that they fucking shorted. Let's see. I think this guy proved me bull. Basket swaps. I'm throwing this out there, and I think we're in Kitty's gonna jump to Robinhood, and the Robinhood stock is gonna skyrocket. I don't think Roaring Kitty will ever use Robinhood, honestly. Like, if you look at Roaring Kitty's background, he's like, I mean, he's like a CPA. Like, he's like a legit trader. Like, he's gonna use a legit platform. Jimmy swap data, dollar swaps. Right. GME and AMC also sit in basket swaps that are expiring soon that are mixed with Chipotle and Robinhood. Right, so basket swaps are like, they're like a derivative. They're like a derivative. So like, they just use it to get more short exposure. So they lump all these stocks together in a basket, and they just fucking sell it, and they just go short on all this. Wait, other shorted stocks. Let's listen to this guy.
That's not by accident. It's possible the court was able to find out who these people were, I don't know, but we can't. And you'll notice that back in 2020, he was doing a bunch of what are called ETF swaps to the tune of $500 million sometimes. Hell, in November 2020, he even crossed the $1 billion limit. And you'll notice that this is a custom basket swap, which means a little package of stocks that they custom make, and they swap all those names together as a basket, quote unquote. And this is where we're gonna start to get fishy. If you remember from the last video, Bill Hwang got a little fucked up by the GameStop incident in 2021, which we're approaching here. And you'll notice that suddenly we're not doing ETF swaps, we're doing a shitload of basket swaps, meaning some certain unknown stocks all basketed together in certain proportions, all getting swapped around in secret. Nobody knows. Most of these are in the tens of millions to hundreds of millions of dollars. Then we get to the week where GameStop did its thing, and we're all custom basket swaps for some huge numbers. $500 million right there, almost $500 million right there and there. And this shit is super opaque, but you can kind of track things by looking at swap counterparties and baskets and kind of correlating. So you can see how I've color coded where the same swap.
Yeah, so I mean that's interesting. Yeah, I mean I'll do more research into those custom basket swaps, and because I think that's why GME and AMC are so connected, is they fucked up. Imagine 80 trillion of foreign swaps, hedge funds sweeping under the rug. True, but you were hoping only because you feel like he's gonna help the small guys. Yeah, he is, but I mean, I just don't think that he'll ever use Robinhood. I mean, you know, Robinhood was selling our data. They sell our traders' data, and they route trades to certain hedge funds that they have connections with, and they, you know, it is. I mean, they were investigated about it in 2021, so I think, you know, I think we're more against Robinhood than we are for them. Yeah, it does seem scary. This is I think it's a lot. I mean, it's very complicated stuff, and I'm not gonna pretend to act like I fully understand all of it, but yeah, I don't know. The video is kind of fishy. Buying a house or buying a tent, yeah. In this economy, you're not wrong. You ain't wrong. We need a short squeeze in this economy, man. Instagram testing unskippable ads. Bro, fuck meta, bro. What the hell? What am I looking at? AMC owned by 98.75% of retail. AMC back at $5. ML Go, what's that? I have no idea what that is. I think that speaks for itself. Is it a bad idea to sell covered calls? Personally, I would say yes. I mean, you have to think, so what was it, a couple days ago? GME went up 100% in pre-market alone. These are very unpredictable stocks. Yes, since it's a covered call, you are hedging your risk. But it's like, I mean, how much money are you gonna make selling these call options, right? So you get the premium. Like, I mean, how much are you looking to make versus like, I mean, this thing could go up 100% tomorrow, and then you just lost all your money. I mean, it's like, I don't know if it's worth it. I personally don't know if it's worth it. I mean, I wouldn't. I mean, if you're selling call options, you're betting that this thing's gonna go down. I mean, gonna go up. I mean, betting that it's gonna go down, so they don't expire in the money. But it's like, if like, let's say for example, you sold all these call options, then the gamma squeeze happens. I mean, you just lost all your money. Like, I just personally wouldn't bet against these bet against these things right now, but it's up to you. Check out ML Go. $1.56 all the way to $14. That's interesting. I mean, I don't know anything about this thing, but I mean, that's pretty interesting. Let's see, when did this happen? June 4th. Yeah, I mean, I don't know enough about that stock, but that is pretty interesting. So yeah, my plan for AMC is to be able to break this $10 mark, shoot up, and if we break this channel, I think we're just gonna slightly go above and hit the top of this channel at 130 bucks. So our next goal, let's see, boom, yeah. Short-term goal for today, break out of this, come up, chop around here. Probably something like that's gonna happen. Alright, I'm gonna hop off for a little bit. I might come back during the end of the day, but I got some stuff to do, so I might make another video tonight, and hope I'll see you guys later.